In the past, when you've joined us on the bid, and again, this is a little bit of a different format, but in the past, you've come on to talk about thematic investing. We've talked about things like AI. We've talked about infrastructure. What role do you see themes playing in the markets today?
The themes are playing a tremendously important role in the markets today, partially just explaining what's happening this year. We've seen so much intrigue and frankly some volatility around artificial intelligence. Is it the biggest thing from the internet? Is it overvalued? There's a lot of tension in the market discerning what's going on with artificial intelligence. There's also a lot of intrigue in the market around supply chains and geopolitics and how that's affecting market returns. And so looking at the world through just a traditional portfolio lens, like looking at it through sectors or looking at it through value or growth, doesn't necessarily do a great job of explaining the themes that are driving the market. So increasingly, we are seeing investors take a thematic view to understand what are the big drivers in the market today, frankly, what are some of the risks in the market today, and how do I build a portfolio that incorporates this lens going forward?
I mean, again, AI and infrastructure seem to be the two that rise to the top of the list. But when you're looking at markets right now, what themes do you have your eye on?
Well, you said a few. I think you can't look at the markets and not think about artificial intelligence. I think what's really important within the artificial intelligence space is starting to look at the adoption pattern of AI. These large language models are very impressive and are very useful. Are we going to see more corporations adopt artificial intelligence, governments, individuals, et cetera, and then, within the next year or 2 years or 3 years, really start to impact the earnings of companies that are delivering artificial intelligence models? We're also looking very closely at geopolitics. Specifically, one of the areas we're looking at is infrastructure. There's so much emphasis on manufacturing in the United States and building out the output in critical sectors, whether it's manufacturing semiconductors or automobiles. And that really can't happen unless you have the infrastructure to support it. That means the electricity, that means the roads, that means the waterways to facilitate all of that manufacturing. And so there's a big focus from our view on is infrastructure keeping up with the demands of a reshoring economy.
Jay, one of the characteristics of U.S. equity markets in recent years has been the dominance of the Mag 7 in terms of the performance that they've contributed to markets, the concentration they represent in the index. This year, they've continued to perform well. Maybe it hasn't been as pronounced as some prior years, but how should investors think about that continued concentration in U.S. markets?
Well, it's a really important characteristic of the U.S. markets. It's just simply you see how top-heavy some of these mega cap, predominantly tech names are in the major indexes, how much they've grown, how much performance they've driven in the indexes over the last several years. So it's really about investors having a more intentional choice of how much exposure do you want to those mega cap tech names. Some investors might say, I want to be top heavy. These are the biggest, baddest, most innovative companies in the world. Other investors might look at it and say, I'm uncomfortable with that level of concentration. I really want to balance out kind of the longer tail of names in the S&P 500 or the NASDAQ 100 to get that kind of broader exposure in the market. So it's really up to investors to make that decision, but it's important to recognize that concentration is a feature of the market in 2025 and something that portfolio managers need to make a decision around.